As the new trading week begins, we're seeing a relief rally here on Wall Street. The Dow is up by triple digits and the S&P 500 up by 1%. So joining me at the beginning of the week is Peter Cardillo for Standard Financial. Peter, great to have you here.
Good to be back.
Well, of course, today we're seeing the dollar higher, global equities higher, and this does come as geopolitical tensions ease somewhat for now. Now, this week, focus does return to fundamentals given all the economic data as well as some of the central bank minutes. So what are you watching?
Well, I'm glad you said geopolitical tensions eased for now, because I really don't think this story has ended. Although there is some backdoor diplomacy going on as we speak, but I think it's going to linger for a while. And so at the next round of heightened political rhetoric, we'll probably see the market react negatively. Now, of course, today we also have an absence of macro news, but that all changes beginning with tomorrow.
And as we look ahead to the rest of the week, we get minutes out from the European Central Bank and the FOMC. Now, this is the first time we're speaking since those CPI numbers as well as PPI figures came out for the U.S. So what do you think we'll see as we head into the coming months?
Well, we have the Jackson Hole conference coming up in a week or so, and basically that's going to be a problem for the Fed. The inflation data we got both at the producers level and at the consumer level, which is more important, obviously, was nothing to speak about, and that's just basically a real headache for the Fed. I think they're going to have a tough time being somewhat hawkish at the conference. There's no inflation there, and the inflation, however, will come back, and that'll come back when we see oil prices get up to around 55, 60. That's when we'll begin to see the inflation numbers tick up and stay up. But until then, I think it's a problem for the Fed.
And of course, Peter, overnight we did get some figures out from Asia. We saw Japan's GDP expand more than expected. And although we saw Chinese figures come in below expectations, they are still strong. So what did you make of those figures?
Yeah, exactly. The Japan activity blew the market away. They were much stronger than expected. However, China, as you indicated, did come in lower, but still at a growth rate. Now, does that mean that China is about to all of a sudden, end up in negative growth? I don't think so. I think it's a temporary pause, and I think that they will pick up. And they are also key for the price of oil going higher.
Okay, Peter, well, thank you so much for your assessment of the global economy on this Monday, and have a great week.
My pleasure.